How's it going? It's Drew Blazik, Logos and Markets. Well, I just ended my interview with Jeff Cassman, and this was, I got to admit, I've been on a bunch of interviews on Catholic economics, usury. This was one of my most favorite ones to have great conversations, and the topic went off on different aspects of Catholic social teachings and economics. So the main topic was the 50-year mortgage, and is it something that should be justified? Is it something that the free market should have? Should the government get involved? Is it good for families to get involved with that? So I got Jeff Casman's perspective, and it was great. We agree on a lot. We disagreed on some things, and I got to admit, it was one of the better interviews I've had, and I would love to do something more with him. So hopefully, you enjoy the interview. Here you go. Thanks. It's Drew Blazik here with Logos and Markets, and I have with me Jeff Cassman, who wrote an article on Crisis Magazine called How to Protect Your Family in a Rigged Housing System. Hint, it's not by renting forever. So, hey, just want to say welcome, Jeff, to the show I have here.
Hey, thank you. Glad to be here.
Yeah, so I just kind of want to go straight into it, and we could talk about because this is kind of a big topic with Trump talking about a 50-year mortgage. So I take it that your article was a response to Mike Parrott's in a way, and if you could talk about what you agree with him, and then where your disagreement came from the article.
Yes, thank you for that opportunity. As I mentioned in my article, Mike is a friend of mine. I would trust him with my family. I think he's a great guy. We see eye to eye on a lot of things. Uh, so this was kind of a fun opportunity for he and I to debate a little bit on the virtue of borrowing money during an inflationary period. So here's the premise of our articles is that the the Federal Reserve creates money out of nothing and then lends that money to banks, and then banks have the ability, essentially through fractional banking, to continue to create money almost out of nothing. And Mike and I agree that this is a essentially usurious practice. So we agree on that. And there are a lot of consequences to that. And I think Mike and I agree on what most of those consequences are. Additionally, there is a practice in this country of spending more money than we have. So we have to print a lot of money, and we've done that in exceptional ways in recent years, particularly during the COVID years. And when you expand the monetary base, you essentially have a supply demand problem. You have a greater supply of money chasing, for the most part, a relatively fixed supply of goods. Real estate as an example, as probably the preeminent example, right? Because they're not making, our Lord is not making more ground. And we can build more houses, but it takes time and there are risks involved. So when you have a lot of dollars that have been pushed into the economy, and in particular, they are made available easily to banks, institutions, hedge funds who can borrow more easily than consumers, then you have created a situation where those institutions can go out and spend money and drive up the price of assets. So you have large hedge funds, for example, buying homes, buying up other assets. And there are some other factors, but I think those are the largest ones. And so then the question becomes, if prices on housing, if the price of housing, generally speaking, is going up, how do families respond to that? How do they deal with it? And one of the ideas that was floated by the Trump economic team, I think it's going to happen, is a 50-year mortgage. So most home buyers use a 30-year mortgage today. Some, a smaller number, get a 15-year mortgage. They floated the idea of a 50-year mortgage in which you're paying back the principal and the interest over 50 years instead of 30, and as a result, your monthly payment would be lower. And the Trump team said, hey, maybe this is a way for families to get into homes. Mike criticized that idea. I think he did a good job of explaining what the 50-year mortgage would cost. I responded and said, look, this is not a good situation, and a 50-year mortgage does not solve this situation. However, there are some things to consider. A 50-year mortgage allows families to get into a home earlier than they otherwise would, right? If they weren't getting into the home, if they were saving up money and trying to wait until they could afford that home, guess what's happening? Prices continue to rise. They're waiting to buy the home doesn't solve that problem. So there's a lost opportunity cost there. They're also not enjoying the home, and they're not having the benefits, the non-economic benefits of the home. And so I said, maybe it's not that bad of a solution after all. For example, if you have a 50-year mortgage, your mortgage payment is lower than a 30-year mortgage. That gives you more cash flow, and more cash flow is generally a good thing for families. This allows you to save money, invest in other opportunities, perhaps things that even grow more quickly than a home, are more liquid than a home, or it's an emergency fund, or it's paying down other debt. So I essentially laid out what I thought was a good response to Mike's claims and another way to look at this problem that we have. So that's maybe not a very short summary, Andrew, of what I was proposing.
So yeah, you explained it really good there. So the questions based on that, one of the questions I want to ask is, at what point in your view does adopting the because we would all agree it's an unjust system, right? In my perspective, I would love if my grandfather worked for a certain period of time, if he could bury that money and then 100 years later buy the same property. Like I would love that, and that means that the human energy would be of our human work would be equal, but it's not like that. So if it's an unjust system, where does it reinforce it rather than merely surviving within it? Like, should Catholics say enough is enough at a certain point and say, I'm not going to participate in it, if that makes sense, rather than, or is that more of a longer term strategy, political, some public policy, maybe ending the Fed or doing something different?
Yeah, I think that's a great question. And my response would be that this is a matter of prudence. Prudentially, I think that most families don't have the option to opt out of our economic system. We could say, for example, that the possession and use of that Federal Reserve note is itself complicity with this whole system of evil, of usury. Well, how are you going to get along in the economy if you've decided I'm not going to use a Federal Reserve note, or I'm not going to use the all of the other foreign currencies that are also fiat and are also part of this usury system? Well, you've put yourself outside of the economy. In my opinion, I think that that is not a prudential good for a family. So I think we're forced to participate. I would note that our participation in this evil is remote, right? It's a remote cooperation with the evil of this system. And so I think that our families have to cooperate. Does the 50-year mortgage, which is kind of the premise of this initial conversation, does it make us more complicit in the system than the 30? I don't think so. Now we're talking about degrees of remote cooperation. By that argument, we would have to be critical of the 30-year mortgage also and say, we should be participating in the 50-year 15, and a 30 is a greater degree of cooperation that's just too much for us. I don't think that argument holds, right? There are pros and cons to each of these. So I think what the average family, which is my principal concern here, the average family has to do what's best for their family without intentionally committing some sort of economic crime. And what would these crimes be? What would these sins be? Well, I assume they'd be sins against the commandment to not steal, because we're participating in this system by which dollars are created out of nothing. But remember, when the money gets down to the level of the family, it's now been assigned an economic value. We're no longer, you and I, creating something from nothing. We're actually trading something for something. That piece of paper, or that entry in the computer ledger, actually has a value, and that value to the family is understood in relation to food, to housing, to clothing, to it's a unit of measure of our work, for example. How many hours do I work to earn that? So I know that that's a little bit complicated, but that's the way I would look at it. Now, responding to the second part of your question, the church has a responsibility here to to teach the truth, to form her members, to discipline her clerics and her politicians who fail to uphold the church's teaching. And we've seen none of that. As far as I can tell, since the council, and maybe even before the council, the church has not spoken with any great authority and has not disciplined anybody on this subject. So I would say that's where the real problem is, not with you and I trying to figure out whether a 30 or a 50-year mortgage is appropriate.
And so, I mean, I totally understand where you're coming from with if you wait and we know prices go up. And I think the biggest mistake people make, they think it's a natural thing that prices go up. That's not natural. It's natural in our current economic system. It is because they're printing dollars. But if you wait, right? If we bought our home in 2019 and we waited, I think our house went up over $100,000 since we bought it. If we waited, we wouldn't have saved as much as the value of the home. So you're saying you got to take advantage, and that makes sense. So here's the next question is, and I do a lot of statistical work. I'm looking at a 50-year mortgage right now. That the premise of the argument is that a 50-year mortgage is beneficial according to payments per month, right? If it's not beneficial per month, uh, um, that means there's no point to have a 50-year mortgage. So if you compare it, so we're looking at a monthly budget, but one thing we have to understand with compound interest, the total interest on a house explodes with compound interest as you have higher maturities. So how should a Catholic measure the benefit of the monthly payment reduction and then the total interest you're going to lose in the lifetime, which might not be the most prudent thing to do because you're going to put your family long term into more debt. So how would you? So just like before you answer the question, I created a ratio. I created a mortgage financial model where I have, if you go from one loan to the next, I did the change of interest divided by the change of monthly payment. And what I'm showing is the cost for every reduction of dollar in monthly payment. What is that costing you in total interest? But go ahead, let me know what your thoughts on that.
Yes, so there are a couple things there. One is if you're going to run that out 50 years, let's make sure that when we're looking at all that additional interest that we're going to pay, let's make sure that we also are considering the asset growth that we've achieved that we would not have been participating in if we did not buy that home at the same time. That would be a consideration, right? Which is what most families are facing. Hey, I can't buy yet, so I'm going to have to wait a few years. So there's a permanent lost opportunity cost on that appreciation. What we're really talking about, though, is a fundamental shift in the philosophy here. We're in an inflationary environment. We likely will continue to be for a very long time because the only way that the United States government can economically survive is by inflating away our commitments, both our debt and the unfunded liabilities that we have. We're talking about well over 100 trillion, it could be 200 trillion dollars between our debt and the unfunded liabilities. How will we ever pay that back? I think everybody agrees the only way to pay that back is to inflate away that debt so that we can actually pay those debts with depreciated dollars. If that's true, then buying an asset like a home is one of the few ways that the American family can use, that Catholics can use to protect themselves. Because as those real estate prices are inflated, your home value will grow also. Most of us don't have the ability to hedge the dollar and protect ourselves, except if we can borrow money. Why? Because when you borrow money, you're going to pay it back with depreciated dollars, right? And I'm also going to assume that the official inflation rates are not true, that the actual inflation that you and I experience in when we send our children to college, when we pay our health insurance premiums, when we spend money on other things that are artificially inflated by the government, that we're experiencing a much higher inflation rate than the published one. So it's not 3 or 4. I think it's 8 or 10. If that's true, then investing in assets that are going to appreciate over the next 10, 20, 30 years is the right move. And to borrow money to do that is an even better move. So it's not just real estate, it would be things like gold or silver. By the way, I don't sell real estate, I don't sell gold or silver, okay? But buying these things and using somebody else's money and then paying it back 20, 30 years from now with those deflated dollars, that's exactly what we would want to do if we believe that we're in an inflationary environment. So I think running the numbers is a great idea. What am I going to gain versus what would I have missed out on? What's the extra cost of ownership? I think those are all great ideas to come to an exact understanding of it. Of course, the numbers will be wrong because we don't know exactly what the future will be, but understanding the principle behind it, what's it going to cost me? I think that's a great idea. Also consider the difference in the mortgage payments. Assume that we're going to invest that money, not in real estate, but we're going to invest it in gold or silver. That $200 or $300 or $500 per month that we save between the 30-year and the 15-year, put that somewhere else. Don't just throw it away. Invest it in something else and see what that's going to come to be over time as well. Does that make sense, Drew?
No, that makes sense. And again, so I think what your premise, now correct me if I'm wrong, we're assuming a family has only two choices, own the home or not. What about the family who can pick either one? So they can do the 50, they could do the 30, and I'm gonna have my numbers out soon, but hypothetically speaking, what if you on a $400,000 loan, you're only saving $50 a month? But what it did, it charged you hundreds of thousands more dollars for the life of the loan because of compound interest and for the mortgage. Isn't there a spiritual risk to that, that we're putting so much emphasis on short-term gain, if you know what I mean? Because I want that $50, $100. Now, again, it all depends on how much we are saving per month, right? And then we have to look at the total cost of it. Um, and what people have to understand too, if you get a 50-year mortgage, you're going to pay a higher interest rate because you're more risk, according to the banks, for a 50-year. So a 15 right now is 5.45%, and I believe a 30 is 6.22. So in my model, I was putting that assumption in there. So so is that what you're arguing, is that a family has 50 or nothing? Or are you arguing also the 50 and the 30?
Well, of course, the reality is what you state is correct. It's not just a binary choice. I think the premise of Mike's article, and I don't want to misquote him, so hopefully I'm not doing that here. I think the premise of his article was, hey, it's tough for families to get into homes, and you know that this 50-year has been offered as a solution, and so I was responding to that. I would agree with you that there's the 15-year mortgage, there's the 30-year mortgage, there may be the 50-year mortgage, and I trust your numbers. It does seem like there could be potentially be a higher risk on the 50. I think it's a prudential decision for the family to make what's best for them. I don't think that there's a inherent evil in having a 30-year versus a 15 or having a 50-year and versus a 30. These are financial instruments we're talking about. These are modern, sophisticated methods to acquire an asset. Now, that asset also has the additional benefit of we get to live there. But we are financing an asset, and I think we need to be smart about that. I'm not claiming that most people who buy homes are smart about it, but I think we need to be smart about it. If I'm paying a higher interest rate, if I'm only saving $40 a month, if I'm going to waste that $40 instead of, say, investing it in the market where it might grow more quickly, if I'm going to be imprudent with that money, then it's probably not a wise decision to get the longer mortgage. And that would be the case with a 15-year also, right? If that person could afford the 15-year mortgage instead of the 30, maybe that's what they should do. If they're not going to be properly, investing their money and so forth. Remember also though that most families are going to move after 7 or 8 years. They're going to sell that home and move. So if the 50-year mortgage allows them to get into that home before they would have otherwise been able to, and they're just going to sell it in 7 or 8 years anyway as they move up, maybe they're not going to pay all that extra interest, right? That's a theoretical. Maybe they're never going to get to that point. It just was a mechanism for allowing them to get into that home. Ultimately, yeah, this is a prudential decision for each family.
So that was the next question, and you brought it up. I saw you 5 to 7 years. I looked at some data. It could be anywhere from 8 to 12. I think today's we've seen a longer time period because interest rates went so high up. It's harder to sell today to get rid of your 3% interest to go into a whatever 6.22. Um, Now, with that said, let's say you buy a home when you're 25, you sell the house when you're 35. Do you think the government should have some sort of restrictions on your age and the 50? I mean, more than likely, if you go up in age, you're not going to outlive the mortgage, right? Should there be maybe for first home buyers have the 50, but then if you're if you're my age, your age, we shouldn't be allowed to have something that is so long?
I think the last thing we want is more government intervention and manipulation of the markets. So I would say no. Let the banks decide, the lenders decide on the risk levels and what they're willing to give you. And by the way, if you're 70 years old, you can go get a 30-year mortgage, and the lenders are happy to do that because they know they've built into all of their models. They know, yeah, you're not going to live there for 30 years. You're not going to pay that off. When you die, the house is going to be sold by your estate, and the bank is going to get paid because they're the first, first ones in place. So I don't think they're concerned about that. If there's an expectation of a rising market, generally speaking, and right now, if we look back at history, the market for residential property, I believe, goes up about 5% per year. Now, stay with me. That's the past. The future, and I believe, and I think most economists would agree, that the future is going to be a higher level of inflation as we deal with all of this debt and unfunded liabilities. So that means that those real estate prices should continue to rise at 5 or a higher level. So the risk for a lender to give you a longer loan, even if you die, there's not much risk there because, again, the estate will sell that property and they should be covered. Make sense?
Yes. Is there a risk that treating inflation as a hedge encourages families to rely on monetary debasement rather than real productivity savings and ownership away from or having free debt? Like, so if we, think about that, we're always worried about economic things. We're not thinking about productive assets.
Yeah, that's a great question. Now we're getting into the serious stuff. Yeah, I think there's a risk. For one, we could be wrong. What if what if we discover some great technology that alters all of this? What if AI and robotics do what Elon Musk has said they will do? And 5 or 10 years from now, there's massive depreciation in almost everything because food is almost free, because labor has almost no value because the robots are doing everything. What if we discover, something on the moon and we can mine it, and all of a sudden gold doesn't have the value that it's always had because there's a surplus of whatever this new magical mineral is. What is that thing they found on that movie where in Africa they found all those minerals and they've got that special mineral that's my kids could answer, but some miracle happens and there's this massive depreciation in most goods. Yeah, that would be a problem with this theory because we've based our theory on inflation. But I think that what we have to do is we have to act based on what our history is, and our history suggests continuing inflation. So I can't really answer for what families should do. I guess if you believed that was going to happen, what would you do? You would stay out of the practice of borrowing money to buy assets, and you would rent. You would rent all of your assets. So what is the risk now to our family? of betting on depreciation, you're gonna you're gonna feel that risk every single month, right? Probably for the rest of your life, just statistically speaking. Do you have a better answer?
To the if it depreciated.
Yeah.
Well, I mean, I think my answer would be if I thought properties. Well, I don't think that's a good thing. I think properties maintaining value is a good thing. And I don't know if I have an answer to the depreciated aspect of it. I mean, like, but renting would. I don't know if renting would work either because people who would be landlords wouldn't want to own property to actually rent their property out, right? If it's going to devalue over time, people are probably going to move money out. And then I think, but I think that's the problem about real estate. I don't think real estate because people have to live somewhere. And the only way it can go down in value if, in my opinion, I was going to ask you this later on, should the government have restrictions on countries like China or BlackRock coming in buying properties? And I think yes. I think homes are not an investment as we see it as a productive asset. It's a place of living. And as long as you have a demand of people, population have a constant growth, I think and you're making homes at the same rate. In a perfect Catholic society is that home prices stay stable, and we don't really worry about that. We worry more about trying to own your property outright. But that goes to my next part, and I know you guys talk about property taxes, and I want to ask your opinion. Do you think property taxes should be eliminated, minimized, or just have simple laws? Government can't take your property from it, foreclose it because you owe money. What's your view on that? Because I believe as you and Mike, you talked about how it's like you're paying rent to the government forever, and it's that mindset. And like you said in your article, we shouldn't rent forever.
Right. Yeah, I think that property taxes, as they exist today, are inherently unjust. It does turn the owner of that private property into a perpetual tenant with no way to ever be done. And if you read Catholic social doctrine, if you read Rerum Novarum, this should be easily condemned as unjust by the church. Of course, she has failed to do so. I think because she succumbs to the fallacy that, well, this is the way that it's always been done. This is the way that the roads are paid for or the schools are paid for. Of course, I make the point that we're paying for schools that are anti-Catholic, that are seeking to destabilize our civilization, that seek to corrupt and pervert our children. So that's certainly not a good thing. Why would we want to force private property owners to pay for something that is evil? That's certainly not what Catholic social teaching assumes, right? We assume that taxation is just. Everything in Catholic social teaching assumes that the taxation is just. So if we conclude that the taxation method is unjust, then of course there should be no support for it. So I think that Catholics should oppose property taxes and seek to fund legitimate government services through other means. And of course, there are other means. In the history of the United States, we've had lots of different taxes to fund legitimate government services. I think it would be great pressure on government schools to have a threat to their revenue and have them justify why they should be funded and funded at the levels that they are. I think that'd be a great conversation for our country to have. And Drew, I hope we get to come back to the question about Chinese or other foreign buyers buying real estate. I think it'd be a great question.
Yeah. So just off that note, and I want to make sure it's clear about. I told my investment courses that if you have $100 and you put money into your home, if I'm going to pay off the principal, and all my models show it, it's actually a pretty bad investment. As in, if you want to know the rate of return, it's actually a lot of times less. It's actually smaller than the interest rate you're paying, according to my models. And uh, but this is my argument though. So I agree. Number one, there are better investments you could do than put on your house, which means debt wouldn't be a bad thing. But I would argue if families didn't have the threat of foreclosure of the banks, which means we are focused on a large down payment. We're focused on paying off our property. We didn't have taxes to worry about. We would be at peace with ourselves. We would be more outspoken because there wouldn't be as much fear of losing your job, not paying your rent or your property tax. It would be a better thing. So I argue there's more intrinsic value of not having a mortgage, even though the true, like sometimes I think we measure GDP, that's like the end all be all. But um, to not own that stuff, a lot of divorces end because of money. A
Yeah,
lot of and a lot of times, and a big concern I have also, and you see this, the price of cars have gone up. The price of cars haven't gone up necessarily, but the loans have changed for cars. Now you can get like a 10-year, 8-year. I think there's a 10-year offer. I know they're 8 years. Now the average price of a car is like 50 something thousand, when not that long ago it was in the I believe 30 something in 2019. So that's the danger. And I think this is to Mike's point, is that if you have more financial instruments that you can easily get these loans at a cheaper monthly cost, you're going to get a bigger house, a bigger car, and that's naturally going to drive up prices, right?
that's right. We've got a monetary base that's growing faster than the population, and we've got a monetary base that's growing faster than these goods, right? Because in the case of the cars, for example, your car is going to last however long, and then it's going to go to the scrap yard. You got to replace it, right? So that's built into the whole concept. Anywhere that you have government manipulation, you're also going to have costs rising faster. Healthcare, we have extreme government manipulation of that market. Education, food. Food is highly regulated, and we've got this program of EBT or food stamps, in which a huge portion of the population is getting money to buy that food. They would probably have different habits if it was their own money, right? We see a lot of fraud in there. There's a huge number also in that marketplace, what we think is illegals that are getting that money. I mentioned that also in my article. And of course, real estate, the real estate market is heavily regulated by the government. When you expand the monetary base, when you push all this money into the hands of banks, they're desperate to loan it out. That's the only way they make money. So we're artificially creating demand for that real estate. So yes, this drives up all the prices. It's an inherently unjust system. However, this causes a prudential decision for us. It's not like, oh, borrowing the money is sinful. We have this romantic notion, and frankly, you've alluded to it a little bit, of this desire that I'm going to have my home, I'm going to rush to pay it off, I'm going to make extra payments on it because I'm going to then one day I'm going to own my home free and clear. Well, first of all, it's probably not a wise decision. As you've mentioned, you're investing your money in a slowly growing asset. You're investing your money in an asset that's not liquid, right? You can't just run to the bank, grab your cash, and go invest it in the opportunity of a lifetime. You have to go to the bank and beg them to loan you money against the value of your own home. And that asset grows slowly. So compare investing your money in your home at 4%, 5% growth per year versus investing, let's say, in the market at 12, and compare those. And where do you want your money to be when you're 65 or 70? You want to own your home free and clear and feel proud of that? Or do you want to have a million, 2 million, whatever the dollars is in the marketplace that's actually yours, that you've already paid tax on, that's free and clear? So I think we have to address these romantic notions. And by the way, I was on Joe McClain's show the other day, and Michael Hitchborn said, his grandfather built the house, owned the land, owned the property free and clear. And guess what? When he got to old age, retirement, he ran out of money. He had to borrow against the value of his property to survive. I think they call that a reverse mortgage. He actually put a mortgage on the house, and they gave him a check every month, so he had enough money for food and clothes and so forth. So we have to, these, unfortunately, our situation today is so complex. We have to really educate ourselves, understand what's happening, make prudent decisions based on reality and not what we wish it was.
So hear me on this one. And I totally agree. Prices rise because of the monetary base. You have a lot of money out there. But I think homes are different. I think homes are different in this regard. Before the 1930s, I think an average loan was 3 to 7 years, and typically you had to have 50% down, which is very difficult. And then what you did was within that 3 to 7 years, you're paying back the interest, and then the banks required the principal at the end of the loan. And what happened was a lot of people pay the interest payments, but when the principal came up, they didn't plan accordingly and save, and therefore they couldn't do it. And then the banks took over the property. Now the government stepped in, there's a bunch of laws that passed, and now I don't think you can do a loan like that, which tells me that if we just had a free market system on loans, it could be unjust because, like, here's a great example before 2008, because I worked at Lowe's at the time. They used to have if you remember this back then, no interest, no payments for a credit card. And what happened was if you didn't have, that means you owe nothing until the end of the 12 months. And if you didn't have the money, all the interest at 23.99% for the year fell on you. And that was crippling people. So the government stepped in and they passed the law. I can't remember the Credit Act, but they passed the law where you could do no interest, but there has to be a minimum payment. Okay. With that said, so my whole premise is that I don't think housing property values go up with the money, is because if the government stepped in here and said, Jeff, you only can have a 15-year mortgage. So I ran the numbers. If you did a 6.22 and a 5.45, a 15 to a 30, you save about 800 a month from a 15 to a 30. Okay. Which means if I go Jeff, that means Jeff would have to purchase, let's say hypothetically back then, you would have to buy a 1,700 square foot house instead of your 3,000, let's say dream house, 3,000 square foot dream house. But so my question is, I'm not necessarily promoting this idea, but would that not restrict the prices going up if only people that have properly saved and is ready to go into that 400, $500,000 home? That means if you're not ready, if you only could have a 15, you have limited options. It's a smaller home. And if you open up the market where any person that has a pretty good job could buy that expensive home, prices would naturally go up. So my question back, if the government came back and restricted these loans, would not home prices be lower and promote the idea of a nation of savers instead of in debt?
I believe that we live in a society in which the government believes that good is evil and evil is good. And this is an anti-Catholic government, a revolutionary government that hates us. So I don't want them involved in anything. As much as we can do to limit their involvement in family, in property, in small businesses, I want to limit that. So I would say, no, I don't want the government deciding who can buy private property. And I think if you look at what Pope Leo wrote in Rerum Novarum, this would be squarely in the range of what he says is immoral. It's kind of a modified socialism. Now, the government is heavily involved in the financing of real estate through lots of different mortgage programs, subsidizing those mortgages, not just for VA, but rural homes and lots of others that essentially enable people who would otherwise in the free market not be able to buy a home. All of those things, in my opinion, should be looked at to say, is that the proper role of government? In my opinion, the answer would be no. I think the banks would operate differently if they did not have all of these insurance programs backing them up. You referenced the zero down, 0%. Remember when they were doing houses at at ridiculous interest rates for no income, no asset, no verification. It was basically if you had a heartbeat, they gave you the loan for the money. That doesn't happen in a normal environment. So that's my answer to the first question. No, I don't want the government limiting who can buy a house or not. But I do support getting the government out of the mortgage business and out of insuring all of these deals. Student loans are another example of this. They created that problem. Or cars, that's another one. But getting to the crux of the problem, remember that everything you and I know about the housing market, what we've heard from our parents and our grandparents, all the data that we've studied from the last, let's call it 100 years, that's a different economy. We were dealing with an economy in which lots of productivity gains. We were dealing with an economy of the king dollar in which everybody wanted to come to America, own the dollar, use the dollar in all of their countries. That is changing with BRICS and with oil and so forth. We had a fast growing population of Americans. That's changed. Now we're better than most countries, but the rest of the world is looking at a population decline. So we're not going to see the booming population in the future that we have in the past. That booming population helped to prop up the real estate market, right? More people searching for more homes. What we're also seeing is a dramatic migration in our population. So we have people leaving places like Detroit and New York and others and moving to places like Florida and Tennessee, where I am, and Texas. So some of these places have a population depression. That's going to affect real estate as well in ways we can't see. So again, I think it's kind of a complicated question that people are going to have to become more educated on going forward.
Oh, okay. Based on that, two questions. I think we both agree on that if the government insures the banks are more likely to give out as much loans as they want. And you would disagree with the government getting involved. Therefore, that drives up the price because if the government wasn't involved, they would look more accurately at each individual. Can they provide the home? Can they pay it back? That would restrict the price. And that's similar, I think, to what I'm saying if the government said the 15-year. So here's two questions I have is, do you think the government should not have gotten involved in the no payments, no interest for like Lowe's, Home Depot, all those companies? And then the second question, because they did get involved in that. Second question is actually I just forgot the second question. It'll come to me after you answer the
Yeah,
first
we'll
question.
we'll deal we'll deal with the first one. So yes, I do think that whenever the government gets involved in a market, they pervert it in some way. Sometimes we know what that is, we can measure it. Other times we can't. So in the case of the government helping to fund banks and insure banks, that's something I wanted to respond to. We all have a comfort level in American banks because we know that the American government backs them. But really what we should want is the most limited level of backing possible. We don't want a bank to suffer because there was a run on the bank. We don't want a bank to suffer because its competitor across town did something and now all of the customers are going to suffer. Okay, that's kind of what we have in mind when we think about the government insuring the bank. But the reality is now that the American government is subsidizing, also we could say insuring all sorts of inappropriate behavior, risky behavior that incentivizes the management of that bank to do things that they would never do if it was their own money. Okay, so that's point number one, kind of the big picture. Now, down to the question of your getting involved with the Lowe's situation. I suspect that there was something going on with that Lowe's advertising that was also deceptive that Congress wanted to deal with. And yeah, that seems like the proper role of the legislature to say, we don't want you engaging in deceptive advertising practices. Don't tell people it's 0% when in fact you're accruing the 29%, 23% APR that most of them are going to have to pay. So that does seem legitimate. I think it's not that I believe there's no legitimate role of government. I just think that the government we have today is proving that it's acting way beyond what it has competency to. For example, should governments be involved with banks? Well, sure, but I want the bank that's lending money on the real estate in Nashville, Tennessee, where I live. I want that to be a local bank that knows what's going on, that cares about the community, that understands where that property is, that knows you've got a good job, et cetera, et cetera. I want that bank to make the loan, not some bank in New York that doesn't know and doesn't care and is backed by the Fed. They're going to act in a more risky way. So the principle of Catholic subsidiarity here applies. People making decisions at the lowest possible level. Why is that good? Because they know the local details. They understand the people and the property. They know, hey, that part of town is turned. People are leaving. Nobody wants to live there anymore because of the crime rate or, whatever. I don't think I'm going to loan on that property, even though Zillow, which doesn't know any of those things, says it's a great property. Does that make sense?
Yeah. So I just want to come back with Lowe's example, and I think this is important. They made it clear is that I mean I don't think it was a deceptive practice, as in people didn't know what they're getting involved with. They made it clear, no payments, no interest, and they made it clear when you sign that if you don't pay it back within 12 months, all the interest would pile up. So I guess I want to make, and I'm not like debating on it. I just want to make it clear if there's no deceptive practices there, should the government get involved in predatory usurious? I would argue that's usurious. Uh, well, I guess I would argue because there's no interest. It would be if you fail to do it. Um, should they have got involved with that? If there is, if, and I'm gonna have the assumption there's no deceptive advertising.
Yeah, I'm not certain about that. It seems like there are some details there that we would want to know before we decide whether it's proper for the central government. If there are no deceptive details, and I'm assuming that was the case. I'm assuming that it was like the big picture, 0%, 12 months, et cetera. Yeah, I'm sure in the fine print somewhere it said if you don't pay it off in 12 months, it's you're going to hit you with this. But I'm assuming that the motive there was that they felt consumers were being deceived. And so, yes, that would be the reason why it would be proper to act.
And but you would also agree that the government's there, and but your argument is that it's an anti-Catholic government, but the government should be there for the common good to
Yes.
say this is good. So if you have those payday loan places are saying for the poor, hey, we're going to charge you whatever percent interest, outrageous. If it's for the common good, the government should step in and say that should be illegal. Would you agree?
Well, I think that we've got to ask ourselves, does this government that we live under, does it have the ability to discern the common good? I think that's an open question, right? We see even today under the present government, which is much less evil than what we had under Biden, for example, or Obama, still continuing with immoral foreign wars, right? Still funding immoral, obviously unjust actions, and domestically as well, right? We could talk about IVF, or we could talk about sodomy, or a variety of other things. So I think the jury is out, or the jury has already concluded. The Catholic jury has already concluded that this revolutionary government, this anti-Catholic government, cannot be trusted to serve the common good. That having been said, yes, that's one of the legitimate roles of the government is the common good. So should the federal government be involved in regulating or suppressing or ending these kind of payday loan places? I'm not sure. And here's why. I've been poor and I've been rich. I remember being faced with difficult challenges like my electricity is going to be turned off tomorrow. I don't have the cash for it. Do I serve my family by going and borrowing money to keep the electricity on? Is that an evil act? Is it an evil act by me to borrow money to keep, my food in the refrigerator, to pay the rent so I don't get kicked out on the street? I don't think that's an evil act by me. Is it an evil act by that payday loan place to loan me $500 and I'm going to pay $50 this month in interest to keep the electricity on? Well, guess what? If the electricity gets turned off, not only is there suffering in the family, my kids can't do school because they're homeschooled. I'm probably not going to be very effective at my job. And the electricity company is going to charge me probably $50 to turn it back on, right? There's a disconnect fee. So is that actually an inherently evil model? I'm going to push back and say it's not a great model, but they're actually serving, the common good of my family in that case. So here's an example of where we've kind of accepted an argument from the left, to be perfectly frank, and it's infected otherwise well-thinking, reasonable Catholics to just assume something. Whereas again, the principle of subsidiarity would say, let's get into the details and find out why that person went to that payday loan place to borrow money. Is it to fund an irresponsible lifestyle? Or is it to save somebody that's in a really bad spot that will be worse if they don't have access to these funds? What do you think, Drew?
Now, what? Now, let me just back on this issue. But wouldn't that be an intrinsic evil? Is for a company to charge a poor, destitute person to do something, not just let alone interest, but great interest. So if you go back to Vix Prevent It, when it talks about any interest on a loan, doesn't matter if you're rich or poor, in the Bible, like, wouldn't that be a great moral sin? If it's an intrinsic evil, shouldn't the government stop it?
Well, in the last 500 years, the church has concluded, if you look at the scholastics and even theologians today, they will all argue that a lender can charge for their lost use of the money, they can charge for risk, they can charge for their expenses involved in a transaction. We're not just talking about business transactions. And because remember, St. Thomas taught that if I lend someone my shirt, they have the duty to return that shirt or that cloak, that coat in the same condition that it was when I lent it to them. You and I know today, economics, we understand that when I lend $1, it's impossible to return it in the same condition. It's going to come back having deteriorated because of inflation. I may not get the dollar back at all. So that's the risk component. I may have had expense in loaning that to you because I had to put up a little building, right, for you to come to and apply. So since Prevent It, we know that there are legitimate moral expenses that can be included. Now, is there interest beyond that that's happening? Sure. But again, I would ask you, is the common good being served when the poor person can't pay the electricity and it's 9 degrees today and I can't pay the electricity company shuts it off, so I go to the payday loan place and I borrow that money? Is it evil on my part? Is it evil on their part to make possible that solution? I don't think so. Now, is it evil if I borrow that money to go gamble or to buy drugs or take a vacation? Sure. But I think we need to think a little more clearly and precisely about that. So I'm going to ask you again, what do you think, Drew? Was that evil to
Well,
facilitate the payment of my electricity bill?
that that's a hard one to argue because many towns and communities have it illegal for them to shut off the electricity. You can't do it during the winter time. You can't do it during certain times. That's a tough question to answer. And I would say, but back to the main point, um, like the Fifth Lateran Council defined usury as anything that produces nothing, and it's for the gain or profit for something that produces nothing without any risk, expense, or work. I mean, I would argue that yeah, you could pay back your salaries with interest. Inflation. I mean, these payday loans are making a profit on it, or they're not going to be doing it. I would argue that that's an intrinsic evil. And according to Vix Prevent It, it's any interest. Every council's defined it. Any profit you make on a loan, um, profit. So after the expenses are paid, any kind of profit. But I think a lot of laws. I don't think you can shut off electricity in these communities. But
Well, I can tell you, I've been active with St. Vincent de Paul for the last 10 years, and they deal with this all the time. They're dealing with people whose utilities have been cut off. They can't afford to get them restarted. St. Vincent de Paul Society does great work. They're in place in most every large parish. In my local parish, they do wonderful stuff. They've developed this system locally where they've got a network with all of the other churches to make sure that people are not abusing charity. Because there are people that go from one church to the next saying, oh, XYZ, and they ask for money and help and so forth. The St. Vincent de Paul Society has done great things, but I assure you that they're dealing with people all the time whose electricity has been turned off. Now, there may be differences in different places. Okay, I don't pretend to know everything, but I do know that there are a lot of counties in America where there's not a St. Vincent de Paul in action. So I think that's a real scenario, and I want to offer that the private market sometimes does, even if it's in a usurious way, because I think there's disagreement about what usury actually is. Mike and I have been not laughing like humorously, but laughing like, why can't we get a definition from the church in the 21st century of what usury really is? Because the church herself borrows money and lends money and invests in activities through the money markets and elsewhere in interest bearing activities. So the church herself, by her actions, is kind of telling us, well, we know that it's not just interest alone that's usury, right? So I would admit that I think there's some question there for me about what usury actually is, even though I find, the 29% or the payday loan places to be distasteful.
Okay. So come, got a few more questions here, and this goes off of Rerum Novarum. Is there a risk that long mortgages undermine Leo the 13th's vision of property as something families can secure and pass down rather than die and give their kids debt? You know what I mean? Because he talks about the whole thing. Private property is so important, especially for productive assets, and it's so important to own it and pass it down. And I think the danger is if you're passing down debt, people aren't going to appreciate what the parents had and passed down. They're going to try to get rid of it as quick as possible.
Yeah, I think there's still truth to that, even though you and I have already seen that real estate is not necessarily as productive as some people have thought, maybe even popes have thought. Perhaps it was a different time that he was thinking. But you and I now understand that real estate's growing at, let's call it 5% a year. If inflation is 3 or 4, I'm not sure that that 1% growth is actually something we'd call productive. But that having been said, if I get a 50-year mortgage and I die and my estate has that property with some debt left on it, yes, that's not as desirable as if I had died and left it, mortgage free. No doubt about it. But you know what's going to happen? My kids are going to sell the property anyway, whether there's a mortgage on it or not. That's what happens when old people die. What we see in 2025 is not what Leo saw in 1900, where you inherited your parents' farm and you continued working it. Guess what? People don't want to work on the farm anymore. 2% of the American population works on the farm. People don't want to do anymore what their parents did. So I think we have a different set of facts at play. I wish I knew what Pope Leo would say today in 2025 about what we're seeing. But Gen X, millennials, and Zoomers, they don't want their parents' property. They don't want their parents' antiques. They don't want to inherit their parents' stuff, generally speaking. So I think it's a red herring.
Okay. So let me go into this last part here. First, I'll give you my perspective on the 50-year. My perspective isn't necessarily by Catholic principles. My perspective is that there is, if you look at the numbers mathematically, there's zero benefit of a 50-year mortgage. That's what my model says. But here's what. So other than that, I'm going to go more in the spiritual aspect. And you probably agree with this. If you have a dollar that devalues over time, which we do, that promotes debt. Like you said, you want to buy today before the asset goes up. Buy the Xbox for 400 today before it goes to 1,000, to say, right? You don't want to wait. If you have, and that's a big problem with the dollar. If you have, let's say, gold, Bitcoin as our monetary system, which it does not grow at production, which means it goes up in value over time. It does the opposite. It creates hoarding. where why would I sell my Bitcoin, my gold today when it's going to be worth double, let's say next year, or gold went up a lot recently. Um, so this is get your opinion on this. Is that this is the problem with debt? Is that debt creates a system where I need immediacy today. For example, if I had a kid and I paid him $50 to do a bunch of yard work, and I paid him the $50 up front, and he's enjoying the $50, and then a couple days later, he's like, "Hey, you got to go in the backyard and do the work." He's gonna like, you're not gonna love the work, right? Christ redeemed labor. You're gonna like, oh, Dad, do I have to? I just spent the $50. But if I told my kid, I'm gonna pay you $50, you go do a good job, you come back to me, and you know how that's like. It's like you love the work in your mind. I'm working towards something, a goal of mine. It is a beautiful thing. So off that psychological aspect of it, in the spiritual world, if we purchase things before we earned it, before I saved it, before I labored for it, like if I want to get a $50,000 car, I'm going to work my butt off, save up for it. Instead, I go in debt today. It creates a mentality of immediacy. I'm thinking of today and I'm not looking at tomorrow. I want what satisfies me today without the work, without the suffering. So my argument is spills into the spiritual life is because those in a debt society is always looking at today, and we're not looking at you. You have 14 kids, right?
Yes.
That's I have 7, and we understand that children are difficult. It's hard. It's something that makes us better people, and it's to raise good citizens for heaven and hopefully eternal things. People who have that mindset look at eternity. So I'll just get your opinion on this. If we had in my perfect Catholic society of economics, first off, the currency would not change, blah, 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 all that. We wouldn't have the Fed. We would be a nation of savers that we would want to work up front to earn it. And that does 2 things. It doesn't make me want to purchase something before I know I want it. Like if you had to work 3 years to get something, you're going to say, that is worth it now. Like you're going to judge it upon the work. Therefore, we wouldn't have any incorrect spending, if that makes sense. Rather than buying stuff today, I'm not going to think about it because I get to go in debt today. It would create people to think of eternity. Our economics bases our behavior in that regard. I don't know if that's really a question or just get your opinion on it.
Yeah, I think there should be a distinction made between investments and productive assets versus consumable goods, right? So borrowing to buy that PlayStation is not something that I would recommend. Now, if we're in a hyperinflationary environment, all of a sudden things change, right? We remember, you and I are old enough to remember both Argentina and Greece suffering these extraordinary inflationary environments. What did the homemakers learn to do with their money? They didn't save because that was dangerous for their family. They spent money as soon as they got it, not because they lacked impulse control, but because the cost of bread was going to be twice tomorrow. And they were going to have to hustle to accumulate enough currency to do that. What I've done with my children in some very practical cases, we've tried really hard for those kids who went to college to uh, to avoid student debt. But I don't have like a religious type conviction against it because that student debt finances the acquisition of knowledge and skills that allow them to earn a greater income. So I've told my children that kind of debt, it's more like an investment in a business. It's more like acquiring something, and then you get a higher rate of return. And we've seen that. I've got children making 6 figures that would not have. They didn't have the skills and abilities, the knowledge to do that without acquiring that. Now, people will say, well, you can go to trade school. Trade school. Well, guess what? Trade school costs money too, by the way, these days. I've got kids that are looking at 40 grand to, go learn a trade, and the unions won't hire you for the most part, right? You got to be on a waiting list for 2 years to get into a union interview. My point is that borrowing money to buy something that's going to give you a higher earning potential, or even a car, right? Borrowing money to buy a car, which is a depreciating asset. But if the car enables you to get to a job that you otherwise could not get to, is that bad debt or is that good debt? So a car, a school, a home, a business that you buy, and there are a lot of businesses that are going to be available to buy in the next 20 years because the boomers are retiring. Their kids don't want the business. Should you go into debt to buy one of those businesses and provide for your family, or should you avoid it because of a debt-based mentality? So I would say, is immediate gratification a good thing? No, everything you said is true. But we are in an economic environment where I think prudence sometimes would say, yeah, go ahead and go to school, borrow money if you have to acquire the skills to support your Catholic family.
I mean, yeah, I totally agree with that. Especially for those who don't have the money. And I'll tell you, just full disclosure, when I was in school, I was taking out the as much subsidized loans as I could because I was putting it into some kind of fund to make money on it and paid it off afterwards. Like
Good for you.
it's interest free. I'm like, hey, they're giving it to me for free. But I guess in a perfect Drew Blazik society, if we had a stable currency, you would agree that a nation of savers would be a better thing than going in debt right away if the currency was stable.
Oh, sure. Yeah. I mean, I think there's no doubt about what you said. All of the virtues that come from that, delayed gratification, from working, from earning. We all know that when you've got that thing that was hard to get, that's the value, and you learn those lessons, and all that's great. Unfortunately, you and I, with these big Catholic families and our responsibilities and obligations, we have to live in a realistic world with real consequences to decisions, and we can't live in that it should be world, and
Yeah.
so yeah, I think we would agree on a lot there, and maybe disagree on some of the finer points of the tactical execution of this out in the real world. And again, I don't know the future. I think it's going to be inflationary, but nobody really knows.
I mean, we all know the rich that's how they take advantage of these kind of situations. They go into debt, use other people's money, and that's how you can make money. Um, no, so I mean, I'm not that totally agreement with in our system. So that kind of goes to the point and to my last questions is that our system pushes us into debt. Like it makes us, there's an incentive to have debt. I mean, the laws they pass, the bondholders are the ones who get the tax, or I'm sorry, the assets first in bankruptcy. Companies get tax write-offs for interest. So our government promotes it because that's money creation. So in the Jeff Cassman world, okay, what would be your if you thought about it or looked into it, your dream idea of a money supply, as is it based on gold, based on silver, is it fiat, is it Chicago plan? What would your dream money supply would be to help out the common good for the Catholic society?
What a great question. I appreciate that, and I'm going to work the China angle in here, okay? Because I wanted to
Okay.
talk about that. Uh, so my dream world would be almost no role for the central government of the United States in the economy. Most of these rules would be decided at the state level. States would be making the rules for their citizens. Local banks, based on gold or some other currency, to be decided by the state regulators. So my idea would be a gold-based economy. Lots of subsidiarity, again, local banks, local currency, state running the economy rather than the central government. The central government has a role in protecting the citizens from domestic or foreign threats. So the Chinese government, whether directly or through proxies, buying up land, whether it's just land for the sake of land or whether it's sensitive land, that's the kind of thing that the federal government has a duty to be involved in and prevent. So I don't want the federal government deciding that you and I can't buy land because of our social credit score, which is where I think we're headed. But I do want the federal government stopping foreign governments from essentially it's kind of like a war. It's an economic war, maybe no shots fired. So that's what I'd like to see. So gold, subsidiarity, local governments, no federal currency, local banks with their own gold-backed currencies and their own financing. That's what I'd like to see.
So One question off that I was going to ask you just real quick. What about BlackRock? Should they restrict that buying property?
Yeah, that seems to be problematic. I haven't followed all of that. I'm not opposed to people getting together to exercise their rights. So you and I have the right to buy property. If you and I and 100 other Catholic husbands and fathers pool our money together to go buy land, I don't want to discourage that. I don't want the feds stopping that, right?
Yeah.
Or 1,000 others, or 1 million of us Catholic husbands and fathers pooling our money together to buy land. I don't want the government to be against that. But it does sound problematic if BlackRock, with its resources, with its ability to borrow money at almost nothing, with its, with its partners in big government buying up real estate, are they doing it just because they know what I'm saying here, what I think you agree with, that real estate's going to go up? Or are they starting to exercise a degree of control over something that's so central to our civilization that it poses a threat? So I'm concerned about that. I don't know, and I'm willing to say that I don't know everything. I don't know what the right solution is there.
So your Jeff Cassman's monetary system, which each individual states would have its own currency, and I'm not against that. I mean, America used to be like that.
Right.
So you like that idea that central government gets out of it? That means Ohio and Michigan would compete, which means if Ohio prints too much money, you're going to see the difference. Not everyone's going to suffer, only Ohio. Therefore, we can vote our leaders out, right?
You stated it exactly correct, and you've illuminated part of why that's important, because the state of Ohio or Michigan, whoever is suffering, they can actually affect change, right? They can run down the street, go to their state representative or their mayor or their city councilman. They can bang on his door, they can get his attention, and they can scare him. We're going to vote you out. Fix this. You and I, we can't do that. We can't even get in to see our congressman, let alone all the others. We're overwhelmed by, excuse me, all the other states. So part of the reason for that local control, that local issue of currency and the local regulation of banks, is that we have the ability to influence those things. So when California makes bad decisions, they pay for it. And their people either change it or they leave. The rest of us don't suffer from it.
And I would just so I interviewed Michael Jones not too long ago, and he does not like a gold standard for money.
Yeah.
And I would agree with you if we could guarantee the growth of gold keeps up with the growth of production.
Yeah.
Therefore, we don't have a devalue or that'll be a appreciation of the dollar over time.
Yeah.
If we can do that, I would agree with that. The only thing I would suggest, if you ever looked into it, Michael Kumoff talks a lot about it. It's called the Chicago Plan.
Yeah.
It was developed in the early 1900s. Fisher was on board. A lot of the conservative economists were. That's a fiat currency, all equity, but it grows at equity. I'm sorry, it grows at production. So production is 4%. The money supply grows at 4. Through what what the Constitution says, that Congress should have the power over the money, right? It should so that kind of goes against, well, I guess Congress could give the power to the states in that regard.
Yeah,
Um,
I think there are a lot of smart guys that have talked about this, but remember what this comes back to is Congress deciding what the numbers are and then tweaking things, and
yeah,
then, oh, we've decided production is this, and oh, and so it's an easily perverted plan. Yeah, there are lots of problems with the gold standard, but I think that there are some smart people that have also talked about, well, we could do X, Y, and Z. Um, but it does work against what I think is the greatest evil of our economic age, which is the usury happening at the Federal Reserve, the devaluation of the dollar. Every single human being is suffering that invisible
yeah.
tax, right? So we talk about all the other, things which are worthy topics, but the number one thing is what's happening institutionally. It's been
And,
institutionalized by our government.
and I always talk about this. This is the evil of the Federal Reserve, is that in the Roman days, if they had a coin, what they started to do was clipping it. But
Yeah,
think about that. If Drew and Jeff, if we worked hard a year before, we have that coin that they could not affect. only the newer coins were affected by debasing the currency. So the older ones were protected. But the system that we have today, our grandparents who worked their butts off, they're devaluing what they have done. So if they saved all that money, that has dropped in value because now you can't distinguish between an old dollar and a new dollar. And that's the genius of this system, that they can tax us when we don't even know it. And I think that definitely needs to change. And Murray, what's his name? Famous economist, but he always talked about if you have a monetary system that the government could borrow on inflation, you'll get more wars and longer wars and more deaths. If the king had to tax us to go to war, quicker wars and not as many because they
Yes.
don't have money. That's one thing to think there. Last thing I want to get your opinion on, Jeff, and it's kind of going through my head, and I forgot to ask E. Michael Jones this question, is that my opinion is you have the free market to make monitors, you have computers, you got this pump here. You have the free market, government stay out of it. Now, money is not a free market thing. Money is an abstract thing that government creates in a way. Um, so when we have banks who are competing against each other, they're competing with a product that's created out of nothing. So hear me out on this. Now this, because I'm a conservative, but there's a book I read and I never knew about it, and I read it into it, and I was like, you know what? There's something fascinating about this. There is one state-ran bank in the United States. Do you know where that's at? Any
I do
chance?
not. No.
The Bank of North Dakota is a state-ran bank, and I don't know if I'm going to properly ask this question. Is that the Bank of North Dakota? So if they have a tax surplus that year, they put the money in there, and who could borrow from that is only the citizens of North Dakota at a very low interest rate, and it's a huge success. And I don't know if you want to comment on it, or I'm just kind of telling people they should look into it. If we had state-ran banks where it's not these private banks who are looking for global, I mean, you got you got all these local banks that they're thinking of how to benefit their profits and not benefit the citizens of Ohio, subsidiarity. That if you had a state-ran bank, as much as it sounds socialist, and it's not because money should be controlled by them, it might be a good idea.
Yeah, I mean, that could be a great alternative. Thank you for bringing it up. I'll look into it. I think my initial reaction, though, maybe no surprise to you, we should stop looking to the state for the solutions to our problems. Yes, they're largely state created. We have to accept that this is part of the cross, part of the consequence of sin in the world. Our Lord is allowing us to suffer under these usurious regimes. But what if Catholics decided to get together in their own kind of co-ops, or let's use the system that's out there, credit unions perhaps, and say we're going to start to mitigate against this with creative financial techniques, whether it's crypto or it's something else that allows an exchange for the currency, but is not 100% dependent upon it, that allows Catholics to start trading with one another. I mean, look, we have many, many centuries of watching the Jews have survived everything that's been thrown at them. They still continue to do business with one another. They still continue to thrive wherever they go. There's something to be learned from that. And I don't mean inappropriate activities. I mean they look out for each other, they take care of one another, they support one another, they invest in the ventures of other families. Catholics need to do the same thing. Instead of just trying to blend into America, which has been our history for the last 200 years, we need to start stepping out and taking control and looking for the kind of solutions that you've mentioned. I'd be in support of that. In fact, if I can just very humbly offer on the real estate question, I recently posted on my Twitter feed 14 ideas for Catholic families to get into a home when they think it's out of reach. Practical, tactical ideas, not, pie in the sky kinds of things. Posted it on my Twitter feed. It's still there. Go get it. Things that we can do right now to help one another.
Hey, that's great stuff. And I'll just say, because it sounds so like looking at the state with the state ran bank. But I think I just want people to understand this, is that when you think about money, money isn't like I'm competing on products or goods. That if you have a market of money, banks want to make the most profit they can. A state-run bank could be for the businesses at very low interest, and it could. It's hard to explain. I brought this up in Republican circles, some groups I was part of. It's just when you hear it, you just naturally want to reject it, the idea, because it sounds socialist, doesn't it? A
Yeah, well, we got
state-run
to.
bank, but it's a very fascinating. I couldn't find much. It's in a book I read. I looked into it. There's a couple videos on YouTube, but not much. But it's a huge success, which is kind of interesting. But
That is neat. Well, we have to face it that our banks are effectively state run already. They may be publicly traded, they may have different names, but let's admit it, they get their money and they get their power from the state. And if the state decides they don't want you around anymore, you go bankrupt. And we've seen that actually
we have,
happen, right? We know how they
yeah.
picked winners and losers. So that's
And
the reality.
one more thing I could throw at you real quick. This is the Drew Blasik wish list. If we couldn't get rid of the Federal Reserve, I think it'd be a smart thing, and it's going back to it, that the central bank in America becomes public and not private. Therefore, Congress can audit it and they can't hide, say, hey, we're a private organization. Rand Paul can get his way. We can audit it. And my thesis on this argument, Jeff, is that if you look at the central banks in the 1800s, I looked at all of them. I collected all the data on it. If it's a private central bank, they tend to get involved in global affairs, and it makes sense. The private banker wants the king to go all over to make a profit to pay him back. If the bank was a public central bank, they only were involved in regional affairs because they don't have that private incentive to make a profit, which I would highly like. It's hard to end the Fed, but we could end to make it a public bank. And I'll just throw this really quick out there. England had, as we know, the imperialist nation that went all over the world. And it wasn't until I think the decline of the empire was around the 50s and the 60s, and they became a public central bank in 1947. And I believe France was 1948. And we both can see that America having a private central bank has been in way more wars and other countries' affairs. I'm not a huge fan of England, how they did things, but they did not get involved like us since the last, 50 years, I would argue.
Yeah, that's an interesting theory. I think it makes sense that a publicly traded entity is going to be forced to look out for the interests of its shareholders. And if those are Americans, presumably there'd be some limit, right? You'd want only American citizens to be shareholders or something. That it makes sense that the institution would serve its shareholders' interests, which would be America first, I think we could say. The other
Yeah.
thing is, of course, a balanced budget. If the Congress had to live within a budget and could not just borrow and spend to finance foreign wars, as an example, boy, that would get us out of a lot of trouble too. So I like those ideas. I'll have to research that some more.
But hey, Jeff, just want to say any last words. I really appreciate taking your time. I love talking about this. I could talk for hours.
Yeah, no, this is great. Thanks for having me on. I would love to have correction and charitable criticism. So please find me. I'm on all social media under my name, Jeff Cassman. I've got a blog where I post occasionally, jeffcassman.com. And if you're a Catholic man listening, please, little self-promotion here, check out Catholic Men of America, catholicmenofamerica.com, nonprofit with canonical approval from the church. We help Catholic men find better jobs. We help Catholic employers find better talent. And we help Catholic entrepreneurs with access to the resources and relationships they need to be successful. So check us out there. Send me your thoughts on economics on social media. Would love to hear from you.
Hey, thanks, Jeff. Appreciate it. It's Drew Blazek, Logos and Markets, and thanks, and God bless.